This is the future.
Okay, I'm going to go through this pretty slow time about how to do a 4-hour strategy, and you don't need to be on the charts all the time. Okay, so on the 4-hour chart, okay, I'm just going to show you a few things first. First thing you need to do is you get TradingView. Now this is TradingView. Just type in, I can send you a link if you want a link to it, and then you click the link. Let me know. I'll put a comment in my on the TradingView with my link to TradingView. Just set an account up. You get a free account as well, so you don't have to pay for it. If you want more indicators and stuff and more stuff when you get involved more, you can pay for it. I think I'm not sure what it costs. I think it's about 15 quid or something. I can't remember, but roughly about that. So that just basically set up TradingView, and that's basically it for that. Okay, one indicator you need on this, okay, if you don't want to come in the community or whatever, and you want to just trade and you just want to learn and see how it is before you start, I want to come to the community. First thing you do is you need the EMA 55, the 55 EMA. So all you need to do is where it says indicators here, okay, is come on here and then type in. I've got all these starred for me for what I use sometimes and when I don't use them. Moving average exponential. Okay, just type it in there and it'll come up with a load. And once you find the one you want, you just click the star, click on it, and then it will come on the side here. All right, I've got mine slightly different ones. Right, I've got multi moving average, which are, there we go, there, that one. I think it's that one there. Sorry, multi moving averages. Okay, so you can click on that and you can have about 5 or 6 EMAs. I think it gives you 5 or 6. So I've got that. Okay, and that's all in one indicator. That's all you need. Once you've done that, when you go onto it, I'll just show you what I mean. When you go onto it, here you go. Here, look. All you need to do is put length 55, and that's it. You can have other ones set. I've not got them on at the moment, but I've got the 55 one. Okay, and that's it. And then EMA will show it, and it'll be just change the colour. Easy enough to do. All you need to do is, if I show you, go into it. When you go to it, go to style, click on it, right, and then it gives you the thickness, and you can change the colour you want. So if any colour you want, that's simple. And then just press OK. Done. All right. I'm going to show you now how to work out trend, right, without any indicators. Now you can get an indicator, which I can show you later on. You can get an indicator and it tells you what trend is. Now you just need to know what the 4-hour trend is doing. Okay, 2 seconds. So you just need the 4-hour trend when what it's doing. Now the market does 3 things. Okay, the market goes up, and it goes down, and it goes sideways. You only want to trade with the trend when it's going up. So as it's going up, okay, it's going up, it comes back down, and it goes back up. As it goes up, it breaks the previous highs. Okay, that's saying it's going up, and it just keeps going up. So it goes down, goes back up, goes up, sorry, down, and then back up again. 2 seconds. Right, and all it's doing is breaking previous highs. So as it's breaking previous highs, that is where you know it's going up. So it's coming back down, breaking previous highs. So that's trending up. And when it's trending down, right, not to use your suck eggs, it's coming down, it's going back up, and it's coming back down. It's breaking this low here, and that means then it's trending down. All right. When it's doing this, it's just consolidating. You want to stay out of that trade. You want to stay out. Does that make sense? So you got up, down, and consolidation. As it comes up, it goes back down again. Okay, it breaks these highs. That means, oh, it's going up because it's breaking the previous high. It's pushing up, then it's coming back down again. Then it breaks the next high. Then it goes back down. Then it breaks the next high. So that means it's pressuring up. Same vice versa. When it's coming down, it's done down, goes back up, comes back down. It breaks the previous low. Then again up and then back down, breaks the previous low. So that means it's trending down. Okay, when it goes sideways and doesn't break the highs or lows, it just keeps going up and down and slightly breaks a little bit and then goes back down again, and it just keeps doing little things. That you want to stay off. Okay. Right, on to the next. Okay. So we've just worked out what trend, how you work out trending up and trending down and going sideways, which is consolidation. So break a structure, right? You want on a trend on this strategy, you want to know is break a structure. Now I've just gone through it basically there with you. As it's going up, when it's pushing back down, it comes up. It has to break structure to prove it's going up, and that is classed as break a structure. So when this high is broken, that's classed as break a structure. Again, when this high is broken by this trend, this line here, it's break a structure, and that's all break a structure is. So you just need a break a structure before it's showing you what the trend's doing, and that's how you can work it out. So, but the market will do like weird stuff. It will do this, and it might only do that, and it'll go up. But look, it's broke structure still. It still broke the structure. It'll do that, and then it'll go up. It doesn't always give you like that, right? It will do this, and it's broke structure. Once it's broke structure, pull back down, right, and then back up again. It's broke structure the previous high. This is the low. This is the high. It's broke structure here. That's all it is. That is post break a structure is. It's simple. Okay, for this strategy to work, there's a couple of things you need to know, right? One, break a structure. Well, two, wrong. There's four or five things you need to know. First thing you need to know the trend, okay, which I just showed you. Second thing you need to know, which is break a structure, okay. That's how you would find if it's trending, okay. So that's two things. The also thing you need to know is the EMAs, which I showed you to set up, and I'll explain that now. The 55 EMA, and also I'll show you how to do the Fibonacci retracement, which is a pullback. And if you can work out how to work a trend out, what break a structure is, what the 55 EMA does, and also the Fibonacci FIBS retracement pullback does, this strategy could work perfect for you, and that is all you need, right, to trade. Okay, so I'm just going to show you the Fibonacci, right. If you, let me just get rid of this quickly. Let me just delete all these. Right, so if we did, as we're coming up and down and up. Now you know this is trending up, okay? And you're thinking, right, okay, cool. When you're looking for a buy now, because you've got the breaker structure, right? You've got a breaker structure here. You don't want it to get in up here as it's broke structure. You want to get in down here, okay? Premium areas, okay? You want to get in down here. So you don't just jump in now because it's broke this here, and you think, well, it's going to trend up, it could keep going. Yes, it could keep going, but then it's going to pull back down, okay? Because market does, it feels in balance. It goes up, it comes back down, it goes back up, it goes up, down. It just keeps going that, right? And then it goes sideways, it goes back up again, it goes back down again, it does all this stuff, right? So you need to know where to get in. And what this Fibonacci does, it gives you an area where you want to come back down. So what you do is, once it starts coming back down, okay, and you can see it's sort of pulling back, right? That's called a pullback. What you do is you get the FIBS, and this is a Fibonacci chart here, the Fibonacci chart here. It's called Fib retracement. What you do, because you're going to go for a buy, okay, you put on the bottom of the wick, right, to the top of the wick as it was put before it started pulling back, right? And your areas, the key areas for you, okay, it's the 50 to the 71, right? That's the key areas. But for this strategy, because you've got no other indicators, my key area for this would go for the 0.618 and the 71, the 0.71, and that would be my key area, right, for this. So what you can do, you can set an alarm. I can't do it now because I'm in replay mode. You can set an alarm for the 50, right? and that's it. That is basically your Fibonacci retracement. If you're going to go for a sell, all right, just for instance, I don't want to go too far ahead of what we're doing, what I'm trying to show you now. If you're doing a sell, all right, and the Fibonacci, and you want to do Fibonacci, and you want to look your areas down here, you would get your Fibonacci, your Fib retracement, and you go from the top to the bottom, right, and then it's as it starts coming back, and then what you do then, you put your area you want will be there, and you want it to pull back into this area, and that's all this strategy is, into this area there, and then go back down. That's what you're looking for. That's it, right? So it is quite a simple strategy to learn, but I'm going to add one more thing in a minute, which is 55 EMAs. Okay, so this is what I'm going to do now. I'm going to show you the 55 EMA with this strategy, and then I'm going to show you on a chart how it actually works. Okay, so you've got it how the fibs work. For the buy, you bottom to the top. For the sell, you want for the top to the bottom. Okay, as it starts pulling back, like again, you can put an alarm in for this area. There's your key areas there. All right. I'm going to now. I don't want to show I'll show you the whole thing in a wanna, but I'm going to show you the area that we need to for the once you get into that area, then you need to wait for something else to happen, which is a 55 EMA, and then you jump in. Okay, so I'm going to show you that now. Okay, let me show you the EMA. So this 55 EMA, what I'll show how it works. Okay, so as you can see here, the EMA is pushing up, and as you can see, look, we're breaking high, broke this high here, pushed up, came back down, broke this high here, right, and then pushed back down. Then, okay, I'm just going to take these indicators a little bit. This is the indicators that we get with the community, which is a better thing. Well, I'm going to show you something now, but forget that. That's another strategy that we're using. If you want a part of the community, you get these extra indicators. We're just going to take them off. Right. So what you're looking for is you want the chart or the candles to come down to the 618. Now, again, like I said before, you can set an alarm on the 50 if you wanted to. Your EMA, your Fibonacci has been pushed out because it's pushing down. Your alarm's gone off because it's hit the 50. You come to the chart now. Now what you're wanting is you want it to hit the 618 here, the 618, right? And then what you're wanting, because you want to up move, you want it to the candle to close above the EMA. Let me just show you what I mean. Right, it's touched the. Right, here we go. I'm just going to pause it there quickly. Okay, so it's touched the 618 and then it's pushed down to 71. Perfect. Right, now it's starting to push up. Now you want it to break. Okay, now it's just touched it there. You want it to break it first. Let me just see. Let's play a bit. 2 seconds. Right, I'm going to show you. I'm going to stop it now. Right, here we go. Right, so it's touched the 71. Then it comes up and closes. Okay, this one slightly, but this one even more. Okay, and then what I do is, okay, you enter on the close of this 4-hour candle here, and then put your stop loss, okay, or your validation line, okay, to the bottom of this wick, and then go for a quick area of your choosing. Okay, you can always go to these highs up here, or you can just go a little bit lower. It's up to yourself. Okay, and then let this run now. Just run it, and then it hits your area that you want. Perfect. So that is it. So it's a simple strategy using the 55 EMAs and the Fibonacci's, right? The Fibonacci. So you're just looking, it's breaking structure, coming back down, it's trending up, it's pushing back down. Set your alarm for the 50, come back down to 71 there on that one there. If it hit the 60 or 618, that's fine. then you're waiting it to break this line here, which is the 55 EMA. It closes above the 55 EMA, the 4-hour candle, and just jump on it there, and then let it go up. That's easy. I would say, yeah, that's easy. It's not that easy. Okay, I don't mean it. What I'm meaning is, it's a simple strategy that can help you sort of get the basics. So let me just recap quickly. Okay, so first thing you do is go TradingView, set that up. Set the EMAs up. You know how to work the Fibonacci's. Okay, the Fibonacci. Let me just. I can set that up as well. I think I've got a video on setting that up. Okay, it's easy to do. Just go on it, and I'll do a Fibonacci lesson on it as well on my YouTube channel. If you have a problem with it, just put a comment on it, and then I'll link you to the video itself. Yeah, and then all you're doing is waiting for the trend. Find the trend, and then wait for break of structure. Wait for the pullback. Set your fibs out. Put an alarm out on the 50. When the 50 alarm goes off, then you wait for it hit the 618 or the 71, and then wait to break the EMA. Close of the EMA, and then yeah, you go with trend. As you know, it's going up, so you want to break it above the EMA, and then enter. Simple as that. Hope you enjoy the video. Just in case I haven't put the Fibonacci numbers on there, let me just show you now. So all you need to do is click on Fibonacci, just draw it anyway, just draw it out, and then get on it, and then just double click it, and then what'll happen, you'll get this up. Okay, so what you want, okay, I have on mine is what you want to put on yours. Okay, background, it's up to yourself. If you do background, you just have to do, if I took the background here, you'll see what I mean. So you click on the background, sorry, and then do that, and then you watch, you see. So you can have it like that if you want it to. Right, I don't have it like that. I have it all clear, so it just makes it neater. Just click the background off. And what you want the 0, you want the 382, the 1, the 0.886, the 50%, the 618, and the 71, and that's it. That's all you need. Okay, and you can change the line levels as well, like thickness. All right, the coordinates. Don't worry about that. Don't worry about that either. It's just the main one you want to look at is this, and that's it. It's simple, and then you should look something like that. All right. Again, just quick. I'm going to go through quickly. So if you're looking for a buy, okay, you want to obviously come back down. So you just basically, if I did this one now, I'm looking for this area here, the premium area. You just basically click on the wick and the wick at the top, and then this is your premium area down here, the square here. And we just put it down, which is a 618, sorry, and the 71, and then it'll come down. Wait for it to pull back. As it pull back up, it will hit this EMA, close above the EMA for a buy, close below the EMA for a sell. Okay, that's it, simple, and that's it. But yeah, that's easy enough. Hope you enjoyed the video. Thanks a lot. I'll see you later. Take care, bye.
This is the future.